Hey, what's up, my friend? So in this video, you'll learn how to trade the head and shoulders chart pattern, right? Specifically, you'll learn what is it and how does it work. Then we'll talk about the biggest mistake, right, that traders make when trading the head and shoulders chart pattern. And finally, I'm going to share with you 3 little known techniques to trade the head and shoulders chart pattern consistently and profitably. Are you ready? Then let's begin. So first and foremost, right, what is the head and shoulders pattern, right? So for those of you who are unaware, right, basically head and shoulders pattern is a trend reversal pattern that looks something like this, right? It has a left shoulder, then it forms the head, which is basically a higher high, and then the right shoulder is basically a lower high. So at this point, right, you have something what we call a neckline that basically connects the two low. And when the market breaks below the neckline, we sort of conclude that this prevailing trend, this existing trend has reversed and the market could possibly head down lower. So this is basically the general idea behind, the head and shoulders chart pattern. But of course, right, there are nuances to it that I want to share with you in this video. So just a quick example, right, it looks something like this. This is the head and shoulders pattern, okay? So now that you have a good understanding of what it looks like, I want to share with you, the biggest mistake that traders make when trading this pattern, and it's none other than this, is that they think an uptrend will reverse just because they spot a head and shoulders pattern. So let me illustrate, right? So let's say, for example, you have a trend that's going up higher and higher, and then just because you spot a head and shoulders pattern over here, you think that the trend will, this is obviously, price cannot go back in time, so this is a little bit of a error on my part, but the point I'm trying to make is that just because you see a head and shoulders chart pattern, it does not mean that the trend will reverse. All right, there are 2 things that you have to take into consideration. Number 1, the strength and the duration of the trend, right? The strength and the duration of the trend. Because if the trend has been going on for let's say 6 months, 7 months, and your pattern, took 3 weeks to form, what are the odds of this 3 weeks pattern, right, overcoming this 6 to 7 months trend, right? The odds is unlikely, right? So you want to be aware of, trading every head and shoulders chart pattern you see, right? Because chances are they are usually against the trend, and if the trend is very strong, right, this pattern more often than not will fail. So here's an example. So you can see over here, right, this is a strong trend, right? Notice, how long, it has been persisting, right? This is in the 4-hour time frame, but you can see that the number of the bars, number of candles on this time frame, right, is so much more than this head and shoulders pattern that is formed, right? So this, to me, when you see this head and shoulders pattern going against this strong trend, right, of longer duration, okay, you want to avoid shorting it, because chances are you would get stopped out, right? So in this case, right, the market did continue trading higher. So this is one thing to take note, right, of the preceding trend before the head and shoulders pattern. If you can pay attention to this one thing, right, you would be able to identify, filter, right, much higher probability head and shoulders chart pattern. Okay, and moving on, right, I want to share with you one thing is how not to trade the head and shoulders pattern. Not that it's wrong, but I find that there are better ways to trade it. So often when traders they identify the head and shoulders pattern like this, right, and this is the neckline, they will go short on the break of the neckline. All right, and where would they put their stop loss? They would say, the pattern will be invalidated if the price retests back above this the head over here. So their stop loss is basically at this level, and their entry is somewhere around here, right? And the issue with this is that your stop loss, right, can be really large, right? This is the size of your stop loss, and if you're trading on the daily time frame, the weekly time frame, this is way too large of a stop loss, because it would take weeks or even months just for the market, right, to give you a profit of 1 hour to basically move off a similar magnitude down lower. It would take weeks or even months. So here's an example, right? So you can see that this is a head and shoulders pattern. I don't really recommend shorting over here and then putting your stop loss above the head, because for example, this is a daily time frame. This is a pretty darn wide stop loss. Okay, so how should you go about trading the head and shoulders chart pattern, right? So this is where I want to share with you 3 little known techniques, right, to actually apply that could actually give you a more favorable risk to reward, right, and a better, higher probability trade on this chart pattern. So the first one is what I call the build up. Okay, so it looks something like this. So head and shoulders pattern, right, is like this, right? So we are not going to short, right, immediately on this break of this neckline, we are looking for a build up. So a build up is basically a tight consolidation looking like this, right? So if you get a build up over here, right, now from a risk to reward perspective, right, it is more favorable because instead of putting your stop loss at the head, you can just put it just above this swing high over here. Okay, so there are a few variations to it. Alternatively, the build up could look something like this, right? Basically like this, right? Where the right shoulder is simply a build up, and you can just, reference it, right, to set your stop loss. And one thing about build up is that, not sure if you are aware, right, is that the market, right, moves from a period of low volatility to high volatility. So in the build up phase, right, this is when the volatility of the market is low, right? And you know that from a period of low volatility will lead to high volatility. So if the market does break down, volatility is likely to expand, right? And this means, right, that from a risk to reward perspective, right, it will be favorable for you, right? If the volatility picks up and moves in your favor, you can see that, you can earn multiple R, right, on your trades. Okay, so basically, here's an example of what I just mentioned. So this one, you can see that the left shoulder, the head, this is the right shoulder, and just beyond it, you have this build-up form over here. So notice, right, you can actually set your stop loss just above this high, right? Just reference it, putting somewhere here, instead of, putting it above the head over here. So you can see that from a risk to reward standpoint, how much, the size of your stop loss, right, would be smaller, which allow you to put on a larger position size. So this is what I mean by the build-up technique. Okay, moving on, the first pullback. So often, right, head and shoulders pattern, right, it may break down, right, without forming a build up. And if you don't go short on this low, you would have, technically missed the move, right? So you might be wondering, hey, Rayner, I don't want to miss the move. What can I do, to kind of hop on back and catch a piece of the move, right? So what you can do is what I call the first pullback. So when the market breaks out, right, rarely, right, does it just, go in one straight line, without doing any form of a pullback, because the market needs to take a break, take a rest. So what you want to look for is what I call the first pullback, where the market starts to retrace. So ideally, right, you want to see, small bodied candle retracing higher, somewhat looking like a bearish flag, right? For those of you who are familiar with chart pattern, looking like a bearish flag. And then you can continue to short this market when the market break below this swing low. And again, your stop loss, you can reference it from this swing high, and you have a tighter stop loss instead of, setting back above this head, which is so large again. Okay, so this is what I mean by the first pullback. And here's an example. Okay, so notice this head and shoulders pattern. Market broke below, right? Didn't give traders much of an opportunity to catch on board the trade. But hey, all is not lost, because if you look for the first pullback, okay, where the market is retracing a little, it gives you an opportunity to catch on board the trade, right, when it breaks below this low. And again, your stop loss can just, reference it from this swing high. All right, so this is what I mean by the first pullback, giving traders a chance to catch a piece of the move, all right, even after it has, breakout. And the last technique I want to share with you is what I call the retest. So it looks something like this. So this is the head and shoulders pattern, okay? And sometimes it does break out and it pulls back. But it pulls back so deep, right? And you wonder, hey, why is the pullback, so deep, right? I'm looking to short and, it keeps pulling back. So what you want to pay attention to is to this previous support that could act as resistance, because this is a prime level to consider placing a short trade, okay? Because you're now shorting back at the level where the market did break out earlier. Okay, so this is what I call the retest. Basically, a retest of the neckline, the retest of previous support turn resistance. Okay, so if the market comes into this area and it gets rejected, right, this now is a favorable trade location to look for short trading setups. And again, your stops can just go above this swing high. Okay, and here's an example. So you can see that this market, again, a head and shoulders pattern, it broke down from a retest over here, right? And then it continued trading lower. So in this scenario, if you ask me, there is two ways you can go about it. You can either look to trade the breakout of this swing low, or even the retest over here. Okay, so this is another example, another technique on how you can trade the head and shoulders pattern. And also one thing to point out is that notice, right, this head and shoulders pattern, right, it's actually against this relatively strong trend. So again, right, if you see the trend is so strong, you don't want to just straight away go short on a breakdown, because it could just as well continue trading higher. So the retest is sort of like a confirmation signaling to you that this market could possibly continue trading lower. Okay, so this is another way to look at it, right, on how this techniques I've shared with you kind of, increase the odds of this pattern working out. All right. So with that said, let's do a quick recap to what you've learned today. Number one, the head and shoulders is a trend reversal pattern, right? Don't short this pattern just because, right, you see that, there's a head and shoulders pattern and you go short, because as I've mentioned, you want to look at what is the preceding move, right? Chances are it's in an uptrend, and if it's a trend that has been trending for very long, right, and very strong, and your pattern is like just a few days or few weeks in duration, bear in mind that chances are that pattern is unlikely to win against that trend. Okay, so bear in mind. And if you want to trade the head and shoulders pattern, there are three techniques you can consider. The head and shoulders pattern with build up, right, basically a tight consolidation. The head and shoulders, right, trading on the first pullback. So if the market breaks down lower and you miss the move, you can look to trade the first pullback and still try to capture a piece of the move. And last but not least, you can trade the head and shoulders pattern on the retest, right? Basically on the retest of the neckline, on the retest of the previous support turn resistance. Okay, so if you've enjoyed this video so far and you want to learn more about my trading approach, methodology, and strategies, you can go down to my website over here, tradingwithrayner.com. Just scroll down a little bit, right? I have 2 trading guides, right, that would equip you in your trading journey, what I call it, the ultimate trend following guide and the ultimate guide to price action trading. So the ultimate guide to price action trading basically will teach you how to read the price action of the market. It's better time your entries and exits. And the ultimate trend following guide is all about how to write massive trends in the market. So for example, right, earlier we discussed about the head and shoulders pattern. One thing that I didn't go in depth, right, is talk about how do you actually, trail your stop loss, how do you exit your winners, because there are different ways to go about doing it. So if you want to learn how to actually use the head and shoulders pattern, right, to write massive trends, right, especially massive trends towards the downside, then you can check out the ultimate trend following guide, where I share with you techniques, right, on how to actually write big trends. Okay, so go ahead and download these 2 free trading guides. Just click on this blue button, right, and I'll send it to your email address completely free of charge. So with that said, I wish you good luck and good trading, right? If you have any comments, feedback, let me know below. And if you enjoyed this video, please hit the like button and the subscribe button, right, so you always stay up to date. So with that said, right, I'll talk to you soon.